We're at a really interesting point right now. We're actually seeing US production start to inflect down. And if you don't see another 50 to 100 rigs or so added in the next, actually next few weeks or so, you're going to start seeing, it looks like oil production start to fall even more. We're already down, it looks like a few 100,000 barrels a day from the start of the year, which you had seen oil production rise substantially at a surprise amount last year. But you need to see more reinvestment. So we saw that in the news with Exxon and Chevron, where they hit sort of pretty high numbers for Q4, and they're guiding to exit for Q4 of 2024 at higher levels. But in the meantime, they're actually, if you dissect their numbers carefully, they're actually guiding to lower production in the first half, particularly onshore U.S. So there's sort of this headline and then the details. And I think the details will start to matter as we see global oil inventories fall. We saw them fall a little in January, which was a big surprise. And to the extent that we see that continue in Q1, I think you could see actually a pretty big oil market response. And I think you could see that narrative that you just mentioned. I think it's been true, and it was very true in 2023. But I think we might actually see that start to transition to sort of more of a narrative of scarcity rather than a narrative of abundance.
Got it. What does this mean in terms of the overall dividend play that most of these stocks have been thriving on for a while, Josh? It's not just about the core business, but also, one of the reasons why you're talking about windfall profits rather, for the oil companies is because of their high profitability and high dividend payout ratios for shareholders. And so how much of that is allure still in this environment where there's still a bit of uncertainty on how much upside there is for prices? So yes, stagnant at these levels, range bound at best, but what about the upside?
Yeah, I mean, the windfall profits tax thing, I think years like 2023 and like we're seeing right now, I think sort of belie the logic of windfall profits taxes. You see tech companies with booming earnings, and Exxon and Chevron and others are seeing healthy earnings here at sort of moderate oil and gas prices, but you're not seeing the sort of over-earning or anything like that you've heard from politicians and others on the matter. So yeah, Exxon and Chevron, their dividends are very well covered. They may actually raise them at some point. They're both doing acquisitions, which they're not the cheapest acquisitions, but they are accretive relative to both those companies' valuations. And they are strategic relative to their asset positioning. And I think what I would expect from these companies is actually to do more acquisitions once they've executed on the announced ones and integrated them. And I think you're going to see some of the other global oil majors as well as large producers. I think you're going to see them go and do large acquisitions too. So I think their dividends look very secure down to much lower oil and gas prices. And, if anything, they may actually see those rise over time. But again, it's less about that from my perspective, because I don't think it's that contentious, and more about what these earnings tell you about the oil market, which is that it's a lot tighter than I think people are saying. And when you look carefully, you actually see that the oil market may be undersupplied in this first half, which was expected to be oversupplied on a consensus basis.